Hey guys, welcome to another episode of Ask Anthony. Today I want to talk about something that's been brewing for the last few months, especially in Australia, and that is the Australian property market. So, just where is the Australian property market headed? I know there's a lot of commentary out there at the moment, but let me give you my analysis and my observation and what I've seen. What I can tell you categorically, our markets are on the move and we are heading towards that next, I'm hesitant to say property boom, but our markets are certainly moving north and are starting to accelerate quite somewhat, okay? So if you're looking to get into the property market, now is the perfect time to get into the market, okay? Because you're never going to see conditions this good for investors wanting to get into the market, okay? Now let me explain why. So let's go back to May when we had the federal election here in Australia. People often ask me, Anthony, how do you predict the bottom of the market and how do you predict the top of the market, okay? First of all, you need to be that close to the activity, that close to the industry. And even if you are, it's almost impossible to predict the top of any market or the bottom of any market. But there are some indicators that you need to look out for. Number one, the day before the federal election, back I think it was the 18th of May, I would say would have been when we were at the bottom of the property market, okay? Because a lot has happened since the general election, the federal election, sorry. So you had the coalition government that held its position in Australia, and it actually then created a lot of certainty almost instantly, okay? Because there were policies such as negative gearing and capital gains tax that the Labor government was threatening to actually change and amend. So it created a lot of uncertainty in the marketplace. So leading up to the election, most Australians were just sitting on their hands and not doing anything, waiting to see the outcome of the election, okay? So when those key policies were no longer subject to any changes, you had a lot more certainty creep into the market, okay? In addition to the election and those policies staying as is, you've had interest rates drop to an all-time low, predominantly to ease unemployment, because the RBA is of the view that unemployment's a little bit too high right now, sitting at about 5.2%. So they're looking to ease the pressure on unemployment. But interest rates, the cash rate in Australia now has been cut to 1% as of the beginning of July. So you've had two interest rate cuts both in July and June this year. And there's a 78% chance of another interest rate cut taking place in November. So money's quite cheap right now if you can get it. And again, I'll quote you some of the interest rates I've seen right now on interest-only loans, fixed albeit for say 2 years, or as little as 3.8% with some lenders, some even less, okay? And I won't comment on principal and interest loans, but they're sitting at around that 3.5%, okay? So that has stimulated a lot of activity in the marketplace. So a lot more investors now are starting to look at it because the numbers start to make sense when interest rates are so low and, you know, cash flow is, if you're choosing the right property, so good that there's very little money out of pocket even before one does their tax, okay? $300,000 in 14 months. $200,000 passive income for the rest of your life when you stop working. $200,000 in capital growth over a 2-year period. These are some of the results that our clients have achieved over the last 12 months. My name's Anthony Peluso, CEO and founder of Wealth for Life. We're going to be running some special events in a town, in a city near you over the coming weeks called An Evening with Wealth for Life. Go onto our website or call us on 1300 793 877 and make a time to book in and come to one of these events. In addition to this, auction clearance rates in Melbourne and Sydney have had a strong showing over the last few weeks, with Sydney clearing 78% of its stock and Melbourne 74% of its stock in the last 7 days. Okay, Lenders are also experiencing an increase in demand for loans, okay? Both home loans, but more importantly, investment loans, okay? ANZ Bank, I know, hasn't had this kind of request for lending since 2017, okay? Now, the big one, the one that I think is going to open up the floodgates somewhat is the assessment criteria that banks use when assessing you as to whether you should get a loan or not, okay? So traditionally, when you go for a loan, banks would assess you on an interest rate of 7.2 to say 7.5%. So they want to know that if interest rates ever got that high, you could still hold on to the loan. So that assessment criteria was quite high, and it knocked a lot of people out of the market because they just didn't service when it came to going for a loan, okay? And it got to a point where it's like, well, wait a minute, interest rates are sitting at 3%, 4%. You can still fix under 4% for the next 3 years. Why am I getting assessed at 7% or 7.5%? Okay? So there was some, so it made a little bit of sense. APRA, the Australian Prudential Regulation Authority, have stepped in over the last few weeks, and you'll see a lot of lenders right now have addressed their assessment criteria. Some of it have decreased it to as low as 5.25%, okay? So people that couldn't get a loan in the past getting assessed at a much higher rate are now not getting assessed at that rate, and you'll find that some of those people can actually get through. Now, that doesn't mean that banks have gone easy on their lending policy and have lapsed their lending policy and criteria. No. Banks are still tight with their lending criteria. And I personally think that's a great thing, because we want to protect consumers. We want to make sure that people that can get a loan, get the loan, and the people that can't get a loan, don't get a loan, okay? And that, that protects our industry, it protects the banks, it protects the investors, and you don't have a lot of that stuff that was happening, 5 years ago, where banks were giving anybody a loan, okay? Let's face it, right? So you still need to manage your money very, very well. You need to be planning your finances and looking after your finances quite well, looking at your assets, your liabilities, and especially your expenses. But the assessment criteria now does make it a little bit easier for Australians to actually, service a loan, okay, when you're applying for a loan. So with the decrease in that, the consumer confidence and optimism in this country now around investment property is really starting to pick up quite somewhat. So if you look at the median house price in Sydney, it's still sitting just over $1 million. And I think in Melbourne, as of last week, the median house price was $820,000. Now, the one thing that I'm starting to see in the marketplace more so than ever is this. Only 66% of Australians actually own their own home. The rest are basically renting. So the other 34% are actually now resigned to the fact that they're going to be renting. So the trend I'm starting to see with home ownership becoming more and more difficult, and with prices continuing to grow, some would argue that it makes no financial sense anyway to own your own home. There's pros and cons for that, and I can certainly have a conversation with anybody that wants more data on that. But based on my experience, it actually makes no sense to own your own home first, okay? Too many of us just put all of our attention on getting into our own home, getting into our own home, getting into our own home. We miss the big picture, okay? We miss the big picture. Getting your own home is great. Paying down the mortgage on your own home is great. Then what? You still need to produce income streams from something else other than your working income, okay? People find that out way too late. And they've spent their entire lifetime paying down their own home only to have nothing more but their own home, okay? How about we build income streams, multiple passive income streams that not only help us pay our own home off faster, but give us something else in addition to our working income while we're working, and more importantly, replace our working income when we stop working, okay? More attention needs to go on that. And right now, there is no better time to address that, okay? So you're going to find more people going into the marketplace right now as renters as opposed to owner-occupiers, which makes it fantastic for investors because there's going to be a lot more demand for rental properties moving forward, okay? So as I say to my clients, and as I'm saying to you guys out there right now that are watching this, okay? There is no better time to get into the property market. For those of you that keep putting it off, or it's not a priority, or you're too busy, or you'll do it next year, there is no next year. You know that, okay? Don't wait for the market to take off to a point where you're reading about it in the media and in the newspapers, because at that point, when you jump in with the rest of the herd, it's too late. The importance of having a one-on-one consultation with one of our advisors. Number one, you want to know how to pay off the mortgage on your home in the fastest possible way. How about understanding and learning how you can become debt-free forever? Imagine paying less tax and having more money going into your pay packet every fortnight. What about securing your financial future in your retirement so you never have to worry and stress about money ever again? These are the things that we go through with you in a one-on-one consultation. Some of the results that we've achieved for our clients by sitting down with us one-on-one, we had one couple who created $300,000 in 14 months. We had another gentleman who's gone on to amass a fortune in real estate that's going to pay him $200,000 per annum for the rest of his life when he stops working. These are just some of the things that come out by sitting down with our advisors in a one-on-one consultation. Get your goal planning and you get your financial planning and your goal setting right in 2019. Take advantage of the tremendous opportunities that exist in the Australian property market right now. Call 1300 793 8877 or visit wealthforlife.com.au and book an appointment in with one of our investment advisors to get your money right in 2019. The smart people, the smart investors actually got in even before the election. Okay? If you follow patterns and you know how to follow indicators and look for indicators, this wasn't difficult to predict. Okay? So if you can get into the property market right now, now's the best time to get in. Get in where it's still towards the bottom of the market and ride the wave all the way to the top. Take advantage of the growth that our market, Melbourne and Sydney I'm talking about, okay? Take advantage of the growth that our markets are going to experience over the next 2 years, okay? Don't wait to be buying up there because, yeah, you'll get into the market and all your friends would have got in and it's the right time to do it because the media said so, but you're not the one that's going to make the money, okay? Interest rates are at an all-time low. They're probably going to get lower, okay? There's amazing buying opportunities out there right now that we're finding for our clients every day. Some of our clients are getting in $25,000, $35,000 below bank valuation, okay? Think about that. That's money in your pocket the minute you sign a contract. And if you know the right properties to buy, you're going to be in a good position over the next 18 months, 2 years. I've seen this happen for the last 20 years, and it's going to happen again. Okay? If you start to read the media commentary, they're actually saying the same thing, which is scary because it's happening a lot faster than anybody predicted. So give us a call on 1300 793 8877 if you're in Australia. But more importantly, come in and have a chat to us, okay? Let's have a look at your financial position right now. Let's have a look if investing in real estate actually makes sense for you and more importantly, you and your family, okay? Because you're not going to find better conditions to get into the market than what exists right now, okay? Take advantage of the fact you can negotiate great terms and conditions. Take advantage of the fact that you can get really good price points. Take advantage of the fact that you can get great interest rates, right? Both variable and fixed. And take advantage of the fact that most people won't do anything until it's written about in the papers and on the news, when the smart people at that point have already made their money. So if you can't or won't get into the market now, I don't know why you'd want to later on, because there are no better buying conditions than right now. Talk to our clients, okay? We are finding them gems. We are finding them amazing real estate in areas that are booming or about to boom. And they're becoming a significant part of their overall wealth creation strategy, okay? Conditions are great. Don't wait for it to be a seller's market again where you're going to be paying top dollar for a piece of real estate when you don't need to in today's conditions, okay? So thank you for listening. Appreciate any feedback, any commentary that you may have. Have a listen to what I've got to say, guys, okay? investigate this yourself, and please don't go jumping into anything without proper consultation, right? You still need to do your research. You still need to do your homework. The point I'm trying to make right now is that conditions right now for a buyer are very, very good. You will gain absolutely nothing from waiting. Okay, there is nothing to be gained from waiting. In fact, things will just work against you. The longer you wait right now, the more things will work against you. Okay, tell you what, if you can get 40, 45 grand, 50 grand worth of capital growth over the next 12 months, isn't that money better off in your pocket? Think about it. What would an extra $45,000, $50,000 in equity growth, something as simple as that, as little as that, what could that do for you? What kind of changes could you make to your family living with an extra $45,000, $50,000 worth of growth? Okay? Hope you enjoyed this episode of Ask Anthony. Love your feedback. Come and have a chat to us. Anything we can do to help you. And we appreciate you sharing this and hitting like and putting some comments down there. Thanks, guys.